What's good, everybody? Welcome to the closing beat. Happy Wednesday, everybody. Hope you're having a great day. If you happen to be staring at the markets today, you may be a little bit nervous, and I'll be honest, this one's going to be a little bit of a longer one today because I want to answer some questions. I want to go over what happened, not my opinion, but I want to go over what's actually going on in the markets. This is called the closing beat. We go over the stock market top to bottom, good, bad, and ugly. Today, we're just going to talk about the ugly because there's not a lot of good out there. But we're going to go over why. And I'm not one of those I told you so guys. I'm one of those I tell you ahead of time kind of guys. So for the last 2 weeks, we did classes for our customers. You even heard me mention on the closing beat here that I want you guys to take a look at your investments and consider going wider because of what the markets were doing. Now, for our customers 2 weeks ago, what we did is we went through the stock market and we said, look at all of these areas that are making new 1-month lows, 3-month lows, 6-month lows, new yearly lows, and I pointed out the markets are going higher, but yet most things are going lower. How can that be? And so we went over how the tech stocks, or a few of the names, were really sort of helping the markets go higher, but under the surface, lots of problems. We showed the graphs, we went through the whole thing. I hope you enjoyed that if you're one of our customers. I can't do it publicly without getting in trouble, so we made it one of our classes for our clients. And that gave you the chance to go, no, I'm happy with where I'm at. I don't mind if there's a pullback, or yeah, let's go wider with the investments. I want to keep everything going the same, but I do want to make some tweaks. And we adjust ahead of time. If you have a particular stock you're invested in now, or you have retirement accounts or something that you're invested in now, and now you're responding, your plan's not there, right? You got to have a plan ahead of time, and that's what we tried to do for you guys. So let's go through it. We'll go over it little by little, and then we'll try to answer as many questions as possible. The Dow was lower on the day by 818 points. The S&P lost 94, and the Nasdaq, which just doesn't get much attention because it's not that big of a number, point-wise, was down 315, but it lost 4%. And I'll give you some bad news after hours here. The Nasdaq is down 5.5%. So that sell-off, even though the market's closed, is still continuing. The Dow is actually down over 1,000 points after the hours here. So they're not really talking about that at the moment. Or maybe they are. I haven't watched. And so you've got this sell-off, right? Now, what happened? Right? We all can see this is the one time where you're going to be watching the Weather Channel and they're going to talk about the stock markets today. You're going to be watching ESPN and they're going to mention the stock markets because it's interesting. It makes your eyeballs look at it. But really, before you go get scared, is there a reason? What happened? What changed? What was going on? Well, like we said, under the surface, there were lots of sectors, lots of stocks making new lows. In fact, 70% of all the stocks in the S&P 500 had already sold off. So over the last 2 weeks, this has already been happening, and that's okay. If you saw it and you were prepared in the short term, if you're one of those short-term traders, then great, but no problem. If you're a longer-term investor, first of all, if you have like 15, 10 years, 20 years, 30 years left until you need retirement money, I don't want to hear it, right? You got plenty of time. Don't fall for the day-to-day activity, but you should know if there's some kind of reset going to happen here. Now, what's changed? I made a ton of notes today. If you're a short-term trader, yes, this dip is something you want to participate in. The traders, the real active and interested traders that are engaged on a daily basis or on a weekly basis will be up all night finding their next great move. It is an exciting time to be a short-term trader. Volatility's here. You got a lot of stocks that have fallen in like a waterfall kind of fashion, and those make for interesting trades if you like playing the bounces. If you're a long-term investor, ask yourself this. The markets went down today. Did anybody panic? And by that, I mean, when you looked at the credit markets, did the credit markets freak out today? Because that's a sign of a pending crash. That could mean bad news. No, the credit markets were fine. They were very orderly. It was a normal day, right? It wasn't really that big of a deal over there. Were there stocks that were moving lower so fast that they were halted or circuit breakers tripped, which is basically a fancy way of saying the stock exchanges say if a particular stock moves too far, too fast, they will stop it. They won't allow you to trade it. Even if it's in the middle of the day, they'll take a break and then they'll open it again. Tilray, the pot stock, was the latest example of that. So that didn't happen. So credit markets were fine. You didn't have stocks getting halted today. You had an orderly, consistent sell-off. And I put the chart right over here on the left so you could see that was about as orderly as you can have it. If you're going to see the market sell off, that's what you want. Very slow and consistent selling. Now, it kind of sucks that all of it happened in one day. Nobody likes to see that. But let me go over to the charts real quick and just show you. Does it pop up? Look, what happened today basically happened in June, but it took 2 weeks to happen. Is there a difference between this and this over here? The only difference is it happened in one day, and nobody likes to see that. But in reality, it's the same decline. It just happened over many days, which means you had more time to get used to it. Today, the shock, the sort of kick in the pants, is that this all happened in one day. And like I said, nobody likes to see that. So overall, the Dow, yes, it did pull back today, still above the 200-day moving average. The Nasdaq down today, closing below the 200-day moving average. That will get some attention. The S&P 500, still very much in a solid, strong uptrend, but did close right on the trend line, also happens to be the 200-day moving average. The Russell 2000 will get attention because it broke through in a hard way today. So your small cap stocks took a beating today, mainly because we're back under the 200-day moving average. Now, I'll ask again, what changed in the long term? Is there something to be worried about? Here's the big picture, and I'm sorry for going a little long today, but I'm sure maybe you don't mind. For some of you, maybe not even old enough to have been around during this, but when the financial crisis happened, the Federal Reserve said, you know what, stock market, you can't handle yourselves right now. Economy, you can't handle yourselves. And so the Federal Reserve said, we're going to take over. We're going to slap some training wheels on the stock market. We're going to slap some training wheels on the economy, and we are going to hold it and move it along so it can't fall until such a point where it can stand on its own and the training wheels can come off. So what they did during the financial crisis, they lowered interest rates. You guys know it's like the lowest interest rates we've ever seen in our lifetimes. That's one of the tools that they use. They then did quantitative easing. And everybody at the time thought, well, quantitative easing, that's a pretty smooth name. That sounds like they really got a good plan here. They're going to do something right. And so we started calling it QE. And so everybody thought, Fed's got us, man. They're going to start buying up everything. This is going to be great. You wouldn't call it quantitative easing if it was just a last-minute plan thrown together. These guys got their stuff figured out. That didn't work. So they did QE2. And everybody thought, well, okay, we just need more juice. That's all it is. They got the same plan, but they're just going to funnel a little bit more money in there. That didn't work. So then they came out with something called Operation Twist. And I remember vividly telling a guy who was a customer of mine from a previous company, he was very knowledgeable and everything, and I'm like, does it worry you that they didn't even take a moment to come up with a clever name for this one? They just said Operation Twist. Most of us don't even know what the hell that was still to this day. But that was when I really felt like, okay, they have nothing left. They didn't even bother to come up with a clever name. They just said, Operation Twist, that's what we're going to do. Just leave us alone, we're going to fix the market. So all through that time, right, as things were going, the market was moving and sort of was still and is still moving based on Federal Reserve's monetary policy. That's a fancy way of saying they put training wheels on the market. Now, what's happening is the Fed has said we're raising rates. We're not going to go buying up everything anymore. We're not interested in buying up bonds as much as we were. So now the stock market reverts back to a free market, right? Like it should have been and like it always has been, or mostly has always been in the past. What does that mean? Well, what that means is investors now don't have to question what's the Fed going to do. The Fed has all but said, we're done. We're moving on, guys. The economy, you can stand on your own now. Stock market, you have proven you can stand on your own. The Federal Reserve has taken the training wheels off. And so investors, the long-term, big-time investors, they go, well, why would I buy a stock now? Why would I even invest? It has to be a good, strong company with good earnings, good fundamentals overall, a growing company that has products that people are interested in. And so that's what people are investing in now. Bad news for Tesla, Snapchat, names that don't make any money. People are not going to invest in a stock now that they know the Fed won't support them anymore. They're going to invest in a stock because it's a growing company. And I'm going to prove that to you in just a second so that you have the heads up on what the next phase of the market's going to be. So if you're a long-term investor, the training wheels are off. When you take training wheels off of a bike, does the child or adult that's on that bike magically ride away and everything's fine? No, right? I mean, there's a little wobbling, right? They take training wheels off. They may have to put their foot down, but they're going to make it. It's going to be fine. And so that's what I want you to picture. I want you to picture the Fed had training wheels. They were using their monetary policy to get things going. And now we're going to revert back to fundamentals. And I'm going to tell you right now, we're just going to go to it. I said yesterday that the upcoming earnings season that starts on Friday is going to be very important, not for earnings per share. Do not focus on that one bit. It won't have much of a difference at all unless a company beats by a mile or misses by a mile. The focus on this earnings season, now that the training wheels are off, is going to be, does the company have rising revenue or revenue to support their tightening margins? Because money's more expensive to borrow, right? The economy is, it's up at this upper end of what's happening here. The consumer is spending and spending and spending, but they can't spend forever. So we need to see that the consumer is still spending, and now that the company has tighter margins overall because of interest rates going up, we need to see that the revenue goes up. So everyone's going to focus on revenue and margins this earnings season. So again, I'm not an I told you so guy. I'm an I'll tell you ahead of time guy, and I'm going to prove it because there was just a name, I believe it was Fluor. Hold on one second. Fluor. Yeah, here we go. Construction. So if you look at Fluor, this company just came out minutes ago, and they told Wall Street that their revenue was not going to be at quite what everybody was expecting. Normally, yeah, stock takes a little bit of a hit, you get over it, no problem. The stock is down over 20% after hours right now. So right now it closed at $56.22. It's trading under $49 because revenue. We know their margins are going to be hurt, revenue is going to be lower. If that continues for all the other stocks that are out there, or the majority of them, nobody cares about earnings per share because you know what? A little secret, Wall Street can play some games with earnings per share. It's called Beat the Street by just 1 penny, and I'll take that from an old sort of mentor of mine. And they can play games with that. They can adjust it. They can, the consensus earnings per share can be a fungible number, right? You can't mess with revenue and you can't mess with profit margins, and that's where everybody's going to focus. So just keep that in mind. I don't know what's going to happen as far as the companies reporting that. My assumption is people are getting a head start on this, assuming that it's not going to be very favorable. From a long-term perspective, know that the training wheels are off. It's going to be wobbly. There's no other way to say it. Whether you're one of our customers or somebody else, it's going to be wobbly. You have to expect that. And that's just me not able to use fancy words and whatever. Okay, so let's go through here. A couple things today, and then we'll maybe take some questions if you have them. Oil, that's how you know the markets were weak today. Oil came down as well. There was actually positive supply news that came out today from Iran. Well, positive for the rest of the world, not for Iran. But so oil was down 3%, and that's normally one that can hold in there. That's also a very strong area of the market right now, and even that area of the market did sell off. Not really a big deal overall. What was big today was the semiconductors. Your semiconductors, we know we need banks and semiconductors to support the market. Good news, bad news here. Ready? So bad news is they sold off today. Bad news is banks sold off today, the big banks, 3%. Good news, both of them now are that bow and arrow that we talk about. They also have news coming up on Friday with JP Morgan, Wells Fargo, Citigroup. Citi is reporting as well. So they've got an opportunity to really do well here and snap back that bow and arrow. So I'll keep talking about that as well. We've used that analogy in the past. So they were down. Transports, that is the definition of a waterfall drop. If you're in our candlesticks classes and you're one of our customers, this is of no surprise to you. You know exactly what this is, and you probably know what's about to happen next. Transports, brutal over the last few days. That's 4% for them today, almost right on the dot. They're approaching being down 10% from the highs there. So obviously some decent weakness there. There really wasn't a lot of stocks. Stocks to take a look at. You got Sears all but gone. They're going to be filing for bankruptcy there. I put that in my notes. McDonald's was positive at the beginning of the day. They did end up finishing lower. Guggenheim upgraded them. They said it's an attractive valuation relative to their peers, and they put a price target of $200 a share. So if you follow analysts, and that's something we're going to start including here, is tracking the analysts, their performance, because everything they do, by the way, is tracked. So we know specifically how they do. But if you think that guy is right with the $200 price target, then obviously today is a discount. Oh, and NEO, I'll point out NEO. Give them a little credit. This company doesn't make any money. They barely make any cars. They don't actually physically make the cars themselves. They sub it out. This company up 5% today. Basically, a big investor that invested in Tesla has now also taken a stake in NIO. Got some headlines there, just a short pop for them. So that was pretty interesting. That was basically what I wanted to cover. I didn't cloud up today with a lot of different stocks that we can look at. I wanted you to know that in the long term, nothing has changed. If you take a long-term chart of the market, you're going to see it do this and then the occasional wiggle around for a while and then continue. That's probably what we're entering into right here. It is so hard to say because of earnings starting on Friday. So what we really want to focus on is what's going to cause earnings, those reports, to drive the markets or push them lower. And I think I've already explained that pretty well. Not sure. Was a good resource to determine stock's real value. Oh, you're not talking to me. Okay, cool. You placed 10K in call options last week and it's crashed out so hard. I'm sorry to hear that. Yeah, those options are probably worth next to nothing at the moment. Sorry to hear that one. I did see Square today down 10%. That will pretty much do it for your options there. The good news is, Tiagio, you don't really have to do anything, right? You could just kind of hold them, see what happens. Hello. Consumer staples. Yeah, some of those, actually, if we look at, and I'll go back to the chart here in just a second. If you look at the S&P 500 today, at the top of the list, you got Dollar Tree. Oh, you want to go over there? You got Dollar Tree up over 1%. Smuckers, we hardly ever talk about Smuckers. General Mills, that we mentioned the other day. So you did have some of those consumer staples. Dollar General moving higher there as well. They were trying to push higher. You had a few utilities in there as well, doing well. But, it's a tough day overall for stocks in general. Back to fundamentals and doing some shopping at discount rates. Yeah. Well, you just want to know where people are going to be focused. We got to say that there's money moving out of the stock market to go into the bond market. That makes perfect sense. Money's moving out because it's a little more attractive over there, and you can't blame them for moving out of there. It does not mean that the stock market is now in trouble, right? If money, it's like sector rotation. Everybody's into pot stocks. Everybody's into Bitcoin. I know that's not sectors, but it's like seeing money shift around, right? We have just been shifting around in the stock market from tech stocks over to consumer discretionary and over to healthcare. You saw that one, and so on. Now the opportunity is to go to the bond market. That's like moving to a completely different house. You take some of your stuff and you go put it in a different house. This house is now slightly less full than it was in the past. And so that's happening there as well. Just a really generic way to look at it. I have no idea what's going to happen tomorrow, USA. But I can tell you that after hours, the stock market is still selling off in a very orderly way today. So that's the key word. No panic in the streets, no panic in the credit markets, no panic in individual stocks. Just slow and steady. And again, I'll point out this chart over here. There will come a day where I'm going to say, today was not orderly. Today was panic selling. Today was something, right? I'll mention that at some point. And when we show this chart over here, you're going to see the waterfall drop during the day with little fits and stops along the way. How is the economy? Good, but car sales are way low. There's actually a lot of indicators that are starting to show a little bit of slowing down there. I'll also say that we talked about this last week. So a historical fact or statistic, when interest rates rise by 24 basis points or more in less than a 30-day period, the S&P comes to a screeching halt immediately. So we mentioned that. This time it did go a couple more days, maybe 5 or 6 days after that, but that is typically a point where the markets stop and adjust, going back to 1960, I believe. 65 is the year. Oh, yeah, look at that. Everybody's scared. Oh, man. Well, now inflation, Alan, is still... Inflation is still under the watchful eye and the, what do they call it? The training wheels of the Fed. They've got a goal in mind, and they, at the moment, are trying to do that, to try to keep it in check. 2% is their number. Derek, you know what I'll tell you? So here's an interesting thing, by the way. I don't think I've ever mentioned this publicly. as a company, not me, not my customers, but as a company, we have comfortably over 1,000 customers. Only one way to say we're nervous, right? And bear with us, the stream, the hurricane's coming through, and it's just but basically, only one of them called with concerns, right? Real concerns. Everyone else that called today and everyone else, our customers that emailed, were like cheering the markets on. You know why? Because they know, right? They know that if they're investing for the long term, it's not a big deal. Now, I'll probably send out a few towels today. I'm sure there's some people that are nervous, but they know it's not a big deal. I took a ton of calls today from people that were like, I got this stock, I'm in this investment for the next 10 years. What the hell, man? What do I do? That were not customers. And for the first part of the day, I'm like, all right, I'm gonna help you, you know, as best as I can. And then the second part of the day, I'm like, what do you want? Like, what am I supposed to say to someone? Like, if you have 10 years left to go, hell, if you have 8 years left to go, really, this doesn't make much of a difference to you. We've done the stats for you guys to kind of show that. So the point being, I like teaching. And actually, tomorrow night, our class, I forgot to mention, our class on Roth conversions is going to be extra insightful because of what's happened in the markets. And also tomorrow night, we're going to do stock talk. I'm going to go over the stock market for all of our customers again that maybe are still concerned but didn't have a chance to call or email or anything. So if you know the stats, if you know that you're invested correctly, you know there's going to be some ups and downs. You're not really very here in the office. So not much I can do. Hurricane's coming through, and so we'll probably just wrap it up there. Alan, we do provide education in the form of weekly classes. If for some reason you can still see us there. Now, you see that? Now the power is flickering. By the way, we're not in the eye of the hurricane or anything. We're on like the side of it, but it's still messing everything up, man. I look forward to it. Nice. The markets do, but not if you own GE and Sears. Yeah, that's true. Yep. Okay, well, hey, that's all I had for you. I just wanted to explain today why. What's happening and why. What's really going on. Do you need to panic? Look, if there's a day you need to panic, I'll tell you. I promise you. Like I said, I'm not a guy that says, I told you so and you should have done this or that. I hate that. I can't stand that. But if I can, I'm going to point something out ahead of time. And if it means that you need to change or adjust or plan ahead or something, at least you'll have time to do that. So I'll definitely do that for you guys. We'll be back tomorrow. Let's see what happens. As of this discussion, the market's finished lower. The Dow finished lower by 4%, by the way. So it added another 1%. The Nasdaq finished down 5.33%. And the S&P 500 finished down 4% right on the dot. So a little more selling pressure. We'll see what happens tomorrow. And enjoy. We'll talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.